Hello, I'm Jeremy Drolbeck with Amerifirst Home Mortgage, and I'm here today with Alan Jeffries from Century 21 Advanced Real Estate. And we wanted to talk a little bit about homestead versus non-homestead property taxes, or in regards to property taxes. So Alan, can you explain what homestead versus non-homestead means?
Yes, in the state of Michigan, we have what is called a homestead property, and that has to be your principal residence. That's the residence that you live in for at least 6 months out of the year. That allows you to have a tax break of whatever the school millage is in your municipality. In most municipalities, it's about 18 mills, which can be somewhere around 50% of your tax bill in some of the smaller townships.
If it's my primary residence, I get a discount on the property. And my guess is that with all the foreclosures out there, a lot of the homes out there are not primary residence. Is that correct?
Correct. When a bank takes a home by foreclosure, they can carry that homestead only until December 31st of that year, and then they have to automatically revoke it, or usually the municipality will. When you buy the home, you have until May 1st to submit a homestead on the property. So make sure when you're buying your property, you get that homestead in a timely manner.
Okay, so what somebody should really take away from this is that at least from my perspective, because I run payments for people all day long, is that when they're looking at a tax bill, they need to watch to see if the property's homestead versus non-homestead, what the current taxes are, because that's going to affect their mortgage payment. And I know you made the comment before, that the first thing I ask is, well, what are the taxes on a house when somebody needs a pre-approval? And that's because it's such a big part of their payment. From your end, when you're out showing properties to people, do you keep an eye on that homestead?
We do. That's the first thing we actually look for. In some municipalities, the taxes can be $200 to $250 per month if it's a non-homestead property. Which, if you take that and take the 18 mills off, you can really save a lot on your payment, or you can buy more house with less payment in taxes.
Right, and I know this time of year it's beginning of the year here, and so right now when we set people up, if the property's currently non-homestead and we know it's going to go homestead, we'll base their payment on that lower tax bill. So right now is a great time to buy. If you wait till a little later in the summer, we won't be able to do that, and I've literally had to turn people away from homes because of the taxes being too high. So what I want people to take away from this message more than anything is make sure your realtor knows what they're doing. You have somebody that can really help you out there, and watch those property taxes for you, and make sure you talk to your lender before you actually write an offer on a home. I'm Jeremy Drolbeck, Amerifirst Home Mortgage, here today with Alan Jeffries from Century 21 Advanced Real Estate.